A few minutes past 5, and Singaporean markets are set to close the week on a bit of a down road. 2 straight days of losses, but while Thursday saw the Straits Times Index shave just half a point off, today sees the local benchmark down by about 0.25%. Notable losers today include UOB and OCBC, with the latter reporting a decline in fourth quarter profits by 11%. And while UOB managed to grow full year profits by 18%, fourth quarter net income still came in below median estimates by analysts covering UOB, who were surveyed by Bloomberg, with the bank also reporting a 56 million Singapore dollar loss on trades and investment income. DBS, though, avoiding the fate of its banking peers, gaining by about 0.7%. Meanwhile, we await the release of earnings by Venture Corp, the manufacturer, today, whose shares are down by about 0.25% ahead of the release. Now, it's Friday, and we're going to take a look at the forex space that's seen quite some activity this week. That's been marked by trade talks, Brexit uncertainties, comments from the ECB's a top economist, and an Australian central bank and monetary authorities who are looking just a little bit skittish. A quick look shows that the euro is currently worth about $1.13. Meanwhile, the British pound is starting to show some signs of weakness. It's only costing about $1.30. Also, it's just showing some weakness of about 0.125%. Meanwhile, the Aussie is also looking rather shaky. It's now trading at about 71 Aussie cents to the greenback, and you're also looking at the Chinese yuan, looking a bit interesting today also. And just a quick check of the Singapore dollar so far today. The SGD is trading at about 1.35 against the US dollar. So with all of that, let me bring in our guest, who joins again from London today. He's an analyst at FXTM, Lukman Otunuga, to help give us his thoughts on what's gone on in the forex space over the last 5 days and what to expect in the coming weeks. Lukman, good morning.
Good morning to you.
All right, Lukman.
Friday.
All right, happy Friday as well. So look, let's start off with the dollar. We saw the Fed minutes revealing dovishness, and it seems that U.S.-China trade talks might yield a deal by March 1. What do you think this all will mean for the U.S. dollar, given the fact that it seems that that on one hand you've got some accommodative monetary policy, but on the other hand, perhaps some signs of these trade uncertainties starting to clear up just a little bit?
I believe that's a lot of factors that are impacting the dollar. Firstly, with the Fed minutes, my biggest takeaway was that Fed officials were actually confused over whether to raise rates again in 2019. I don't really blame them. Trade developments and geopolitical risks have actually impacted the global economy, while the US is also facing some of its own trials. So the Fed is unlikely to raise rates this year, but interestingly, the dollar is still trading where it is right now. It hasn't really weakened as much as I would have anticipated. And my conclusion is that I think that markets still feel that the United States is still doing pretty well when compared to everyone else. Now, when we're looking at trade talks, lessons of the past have actually taught us that we shouldn't be too optimistic when we're speaking about trade. A major breakthrough seems unlikely. However, if we do see a situation today where short-term agreements are achieved, which opens the path to extend the March 1 deadline, I think this would be very positive for financial markets, but naturally negative for the dollar.
And what would the outlook be on the yuan if depending on what happens on March 1, whether or not they reach or not reach an agreement by that time?
Well, when we look at the yuan, I think the yuan's outlook, of course, will be impacted by how markets, assess the trade deals, global economic conditions, and of course the health of the Chinese economy. A positive outcome to trade talks should boost attraction towards the Chinese yuan, and this has the ability to also lift other emerging market currencies. I actually looked at the dollar, Chinese yuan, this morning, and I saw prices trading around the 6.72 region. So, a positive development where it does renew appetite for risky assets, including the yuan, could see the dollar against the Chinese yuan actually break below this important support region.
All right, and Lukman, just quickly, we just wanted to get your outlook on the Singapore dollar also. I mean, we have seen it start to show signs of a bit of weakness. What's the updated outlook from the folks over at FXTM regarding our local currency over here?
So the Singapore dollar is actually positive year to date. It's faring quite well when you compare it to other Southeast Asian currencies. Naturally, of course, domestic conditions in Singapore will play a key role in where the Singapore dollar trades, but it's still all about external risks. We're talking about trade tensions, global sentiment. So there's one thing I'm looking at. If trade tensions, if trade talks continue to persist and trade tensions do actually become a major theme, a situation where no deal is achieved, this will impact the Singapore dollar in the form of weaker external demand, which will impact manufacturing, the sector in Singapore. But right now, the Singapore dollar is trading around 135, so we'll be paying very close attention to see how prices react around this important region.
All right, that's Lukman Otunuga, analyst at FXTM, who joins us live from London again. Thanks for joining us today. Good morning and have a good weekend, sir.